Gonna be sitting on your ass on the sofa in October watching DVD Trader land on the moon.
Hey, it's Pete from the Small Business Resource Center and the Small Business Resource Center YouTube channel. Here with a video which is kind of interesting. First of all, this is not financial advice or advice to buy, sell, or trade any stocks or commodities. This is for entertainment purposes only. It's kind of interesting how things line up because it seems potentially that on October 1st, the transition from the LIBOR system, London Interchange Offered Rate, to the SOFR system, which is a secured overnight financing rate, could have significant effect on trade, stocks, and commodities. So I'm going to break down what I came up with and how that's going to affect you. Keep in mind, I got to look down because I have all this typed and I got to read it. I don't have it memorized. But if you see from that first video, also not financial advice. When it comes to trade and business and they're making these changes, one thing I want to keep in mind, which is kind of suspicious, is on October 1st, there is supposed to be a strike. And I don't know if that was planned on purpose to for the ports. So a lot of the ports in the United States are supposed to be on strike. Whether that happens or not, I don't know. But you can look it up in the news. It's all over. And two, when we're looking at trade and business, there could be a significant impact on the cost to borrow because of the LIBOR system we use globally as a benchmark for various loans, including corporate lending. So when we're shifting to the SOFR system, which seems to be more stable and transparent in their rates, and it's based on actual overnight transitions rather than estimates. And keep in mind, there's trillions of dollars being traded overnight at, in my opinion, high rates. But, I'm not here to debate that. It's not my system. This could affect rates on trading and financing and borrowed rates on many firms, particularly those to be lower than the LIBOR beneficial international rate. So currency volatility. Since this system is in America and the London system was in London, there could be currency volatility, and the overnight shift could affect the currency markets and international trade costs. Stocks. When it comes down to stocks and banking, the transition may create near-term volatility for stocks in banking sectors as institutions are adapting to this new system. Banks that were more resilient on LIBOR could face initial disruptions in profitability, and risk or changes in risk management practices could affect their stocks. So we have to keep these things in mind. Interest rate sensitive sectors. Interest rate sectors like real estate that could be affected, utilities, construction, which have a heavy debt load and can see some fluctuations. If SOFR provides a lower interest rate than LIBOR, it may reduce the cost of capital, potentially boosting these sectors, meaning, they can go up. If their cost to do business goes down drastically, typically their valuation goes up. Okay, market uncertainty. As a market adjusts, some volatility in broader equities is expected as investors recalibrate their models of pricing debt into the securities. This could impact the stocks significantly. Commodities, gold, oil, metals, many of them rely on futures and swaps. If you look at the derivatives market, one bank in particular, JP Morgan Chase, 57 trillion, which is amazing to have that many. But when you're looking at these and considering more transparent and less prone, this could reduce the risk of commodities in the market, affecting assets used as inflation and with different hedges like gold. The increased stability might make commodities more attractive. So, of course, more people might start investing in commodities because their interest rates are going lower. For the derivatives market, repricing of contracts. LIBOR was the reference rate for trillion dollars of derivatives. Transitioning to the SOFR system will require widespread repricing of the contracts, possibly leading to temporary market dislocation. This might especially affect trading volumes and volatility in bonds and structural products. So what the transition from the LIBOR system to SOFR is expected to do is make the market more transparent. In the short term, it actually should reduce the debt load for all of these systems, but it could create a lot of market volatility. So this is happening October 1st. Hopefully you're watching this before. If you're watching it after, I hope you enjoyed the ride and everything went how you wanted it. It's Pete from the Small Business Resource Center, the Small Business Resource Center YouTube channel. Like, subscribe, comment. Have a great day.